What if I told you that a freelancer or self employed person earning $100,000 could legally reduce their tax bill to almost nothing? Not by cheating, not by hiding money, not by doing anything shady, by using the exact same strategies that wealthy business owners and their accountants have been using for decades, strategies that are sitting right there in the tax code, available to anyone who knows where to look. I'm Paulette Foster with PRF Tax Service, and today I'm walking you through a legal, step by step framework for dramatically reducing your taxable income as a self employed person. Let's get into it. First, let me set the stage so this makes sense. If you are self employed and you earn $100,000, your tax situation looks very different from someone who earns $100,000 as a W 2 employee. You are responsible for both the employee and employer portions of Social Security and Medicare. That's the self employment tax, which is 15.3% right off the top. Then you have federal income tax on top of that, and state income tax, depending on where you live. Without any strategy, a self employed person earning $100,000 could easily owe $25,000 to $35,000 or more in total taxes. But here's the thing, the tax code was written with deductions, credits, and retirement strategies specifically designed to reduce that number, and most self employed people are not using all of them. So let's walk through the framework. Step one, deduct your self employment tax. This one most people know about, but let's start here because it matters. The IRS allows you to deduct half of your self employment tax from your gross income. So if you owe $14,130 in self employment tax, on $100,000 of income, you can immediately deduct $7,065 from your taxable income. That brings you down to $92,935 before we even start on anything else. Step two, max out your SEPIRA or Solo 401k. This is the single most powerful tool available to self employed people, and it is wildly underused. ASEPIRA allows you to contribute up to 25% of your net self employment income, up to a maximum of $66,000 in 2023. A solo 401k allows even more flexibility with both employee and employer contributions. Let's say after your self employment tax deduction, your net income is around $92,000. 25% of that is approximately $23,000. If you contribute $23,000 to a SEP IRA, that entire amount comes off your taxable income. We are now down to roughly $70,000 in taxable income, and we haven't even touched business deductions yet. Step three, deduct your health insurance premiums. If you are self employed and you pay for your own health insurance, which most freelancers do, 100% of those premiums are deductible. That includes medical, dental, and vision for you and your family. The average self employed person pays anywhere from $3,000 to $8,000 or more per year in health insurance premiums. Let's use $5,000 as a conservative number. That comes straight off your taxable income. We are now down to approximately $65,000. Step four, stack your business deductions. This is where it gets really powerful. As a self employed person, you can deduct every ordinary and necessary business expense. And for freelancers, gig workers, and content creators, that list is longer than most people realize. Home office deduction. If you use a dedicated space in your home exclusively for business, you can deduct a portion of your rent or mortgage, utilities, and internet based on the square footage of that space. For a lot of people, this is $2,000 to $5,000 per year, vehicle and mileage. If you use your car for business, driving to clients, picking up supplies, going to meetings, you can deduct either the actual expenses or the standard mileage rate. In 2023, that was 65.5 cents per mile. If you drive 10,000 business miles in a year, that's $6,550 in deductions. Equipment and technology. Your computer, your phone, your camera, your microphone, your software subscriptions, your internet bill, all potentially deductible based on business use percentage. Education and professional development. Courses, books, seminars, coaching. Anything that helps you do your job better is deductible. Marketing and advertising, your website, your social media tools, any paid promotion, deductible. Professional services, your accountant, your lawyer, any contractors you hire, deductible. Let's say your total business deductions add up to $15,000. And for most active freelancers, that is a conservative number. That brings your taxable income down to approximately $50,000. Step 5, use the qualified business income deduction. This one is huge, and a lot of self employed people don't even know it exists. The QBI deduction, also known as the Section 199A deduction, allows eligible self employed individuals to deduct up to 20% of their qualified business income. This deduction was created specifically for small business owners and freelancers. 20% of $50,000 is $10,000. That brings your taxable income down to $40,000. Now let's look at what that means for your actual tax bill. The standard deduction for a single filer in 2023 is $13,850. Subtract that from $40,000 and you are at $26,150 in taxable income. The federal income tax on $26,150 for a single filer is approximately $2,900. Compare that to the $25,000 to $35,000 you might have owed with no strategy, and you can see why this matters. And depending on your specific situation, your state, your filing status, additional credits you may qualify for, that number can get even lower. Now, I want to be very clear about something. This framework is not one size fits all. Every person's tax situation is different. The numbers I use today are examples to illustrate the strategy. Your actual numbers will depend on your specific income, expenses, location, and circumstances. But the principles are real. The deductions are real, the retirement contributions are real, and the QBI deduction is real. What is also real is that most self employed people are leaving thousands of dollars on the table every single year simply because they don't know these strategies exist. That changes today. If you want to make sure you are capturing every deduction you are legally entitled to, I put together a free tax savings checklist specifically for freelancers, gig workers, and small business owners. It covers all the most commonly missed deductions in one simple document. It is free, it takes 30 seconds to grab, and the link is in the description. And if you want to sit down and actually map out this framework for your specific situation, book a free 15-minute consultation with me, also in the description. I'm Paulette Foster with PRF Tax Service. New videos every Tuesday and Thursday. Subscribe so you don't miss the next one, and I'll see you then.